Okay, today I'm going to be going over chart patterns that anybody can just go ahead and spot out and see actually a trend reversal or kind of like a trend continuation. Okay, now from what I see here, we're in a trend reversal because even though the slower moving average of 20 is crossed below the 50, I still see a triple bottom touch. Go ahead and draw those out. Make a rectangle instead. Still see a triple bottom touch. That's 1, 2, and I'm on the weekly Euro USD. This is a chart of 2016 November, so you can go ahead and use this for your current analysis. Go ahead and put this in. 1, 2, 3 touches to the downside. Had a hell of a time breaking this support right here, and this, in my opinion, is going to be headed back up to this resistance level here, which can be placed here or here. I'm going to just go ahead and place it here. The medium range. A touch there, there, and there. Now, as you can see, the moving averages kind of started to narrow out and eventually crossed over. That crossover itself signifies a trend reversal or a pullback. I like to say it's a trend reversal in this case because of, once again, another factors. Support level, triple bottom touch to that support level, meaning that's a very strong support level. 3 taps, and if it doesn't break on the 3rd tap, then it's for sure going to hold and go back up to this resistance and see what it does from there. Now I got my take profit here at this resistance, just a little bit below it, so in case it doesn't hit it, I'm still going to take profit. $800 to take profit. Stop loss can be placed a little bit below it, depending what your lot size is and what your risk to reward appetite is. Okay, let's go ahead and spot some more chart patterns, and I see some more actually right now. See another one. Where'd it go? Okay, I see it. Okie dokie. This March 13th. Alright, I see another one. And it's at a resistance, a support, I'm sorry. 1, 2, 3 touches to support. It headed back up to the resistance. That was a 1,000 pip move. As you can see, it moving average 20 crossed over this exponential, by the way, crossed over the 50, the simple 50, came back, retested this support, went up, came down, went up again, faked a lot of people out because they thought for sure, okay, this is a double bottom, so I'm going to go in for a buy. And what the market makers do, push the price right back down to this very significant support level. Okay. Now, since price didn't break it the 2 touches before, that should have been a signal to go ahead and watch out, keep an eye out. And after that candle there closed, you could have got in on this candle here, being the green moving average is above the red one, meaning it's a buy. 20, I color coded it, so you can tell which one's going to be a bull, which one's going to be a bear move. Okay, so you can go ahead and go for that 866 pip move. 886, I'm sorry. After this close of this candle here. Okay, there's another triple bottom pattern. 1, 2, 3, triple bottom. Okay, People thought it was going to go ahead for sure buy. Had a lot of stops placed right here. Market makers seen that. They're like, okay, everybody's in for this buy, so they think it's sweet. They push the price right back down. People stops. Stop orders kept getting hit, kept getting activated, and the momentum from that move actually made that go down even more. As you can tell from these big, long bars, big long candles, and it hit that. It just couldn't. It couldn't break past this. Okay. A lot of institutional orders were placed at this level. Okay. That's why it's very important to know your levels. See if we can spot out another one. I wouldn't classify this as a triple bottom because it's on a sort of an up move formation. I would classify this more as a double bottom. Okay, being as though this leg is a little bit higher than this low. Okay, this low is a little higher than this low. That's more so of a double bottom. Okay, with the pullback and a continuation. Okay, go ahead and mark in another level here for my charts. One more. Okay, they got a double top here. Boom, boom. Okay, kind of even topped out right here. Now, if you see, now if it came down to this level and you see it didn't pull back again, you can go ahead and bet that that long candle signifies that that's going to keep on going down. Okay, and your moving average went along with it. Okay, double top. Go ahead, mark that out. Double top, double bottom. You can go ahead and mark this as support, but I don't like my charts that cluttered up. That is kind of a weak support, but I can go ahead and erase that because I got my grid up. Okay, the grid show you the levels over here, the even levels. Okay, the psychological levels. Okay, and you got your odd levels actually also, but I like to say the got your odd, got your even. The even are more powerful than the odds. So look for another one. Okay, here. This would not be considered a double bottom. This will be considered an inverted head and shoulders. Why? I'm going to tell you just in a second. Let me go ahead and finish marking it up. Inverted head and shoulders because shoulder A is a low, then the head made a lower low than shoulder A, and shoulder C, point C, A, B, C, made a higher low than the head, matching up with that one. As you can see, matched perfectly up with it, making that a head and shoulders, not a triple bottom, a head and shoulders. It's more of a V-shaped formation. Still a trend reversal, but it's a head and shoulders, not a triple bottom. Okay, a triple bottom is more so on the same level. Okay, same price level. You can see the moving average followed it right after, up to this double top. See, chart patterns are very powerful. Now somebody got in for this. An institution got in for this. For how many pips? 3,800 pips. Okay? This is why institutions make a lot of money. They don't trade complicated. They trade simple chart patterns, simple moving averages, Simple naked trading sometimes even. Price action, supply and demand. That's all. So I want to say this is a double top. You got A and B. You got B. It's kind of like a lower high than the first one. Still kind of a double top type thing. A lot of people would miss that because B is lower than A. Got another type of double top. Boom, down, came up, boom. So you can have it in many forms. Small, you can have them in big increments. You got to be on the lookout for them. Now somebody got in there 600 pips on that double top. And we come down here. I would say this is a triple bottom. Why? Even though C, the point of C, is higher than A and B, you got A and you got B on the same level, then you got C. Just because C doesn't come down and touch that price level with A and B doesn't mean that that's not a triple top. In fact, A and B touch that level, verifies, boom, boom, that's going to be a significant bottom, okay, with the bounce. Now, if you see here that it's coming towards that, if it doesn't even touch it, if it comes close to it, okay, that's 180 pip gap, 135 pip gap. So what? That's still a pattern formation, okay? Very strong pattern formation. I'm going to say that's a triple bottom, not a head and shoulders, because this point A is not higher than point B. Okay, it's not. Let's see if we can find some more. And that's actually the beginning of the history. Got a double bottom here, boom, boom, and it shot up. Okay. And a double top here, and it shot down. So I can tell it's a double bottom or top also because it's on the slant. Point A, point B. Point B is higher than point A. Boom, came down on a slant. Okay. Boom, bow on a slant. As you can tell, all the rest of these levels just went ahead and hit it too. So if you would have got in here, you would have chopped out all that noise and just been along for that 1,000 pip ride. Okay. Similar here. Boom. Went down. What did it do after that? Went down. 2,000 pip ride. Till you got to this candle pattern here, which is a doji. Boom. Now mind you, these are week-long charts, so it's going to take a while for these patterns to go ahead and complete and form. But that's why I like to do my analysis on a weekly chart. Sometimes maybe the daily, not really anything lower than that. I will trade lower time frames such as a 15-minute, but I will not trade it on a consistent basis because it's just not, it's too much noise. Anything below the 4 hours, too much noise. That's my analysis for Euro USD and spotting out chart patterns.